Thank you for tuning in to a special edition of the VULCAN Report. This VULCAN Report is specifically dealing with the cryptocurrency situation and what has been transpiring as of late. And we're going to dive in and deal with a few things. I've delayed in making this. I've held on to this for a couple of weeks as I was just watching how things were transpiring over the past several weeks, and it seems like we finally hit a crescendo, and I wanted to deal with some issues to help us to think in a broader sense and to make sense of things that are kind of nonsensical, and also to deal with some predictions that have come true regarding the entire cryptocurrency phenomenon. We find ourselves at a very, very interesting crossroads here. And I think in the coming days, weeks, months, years, that our global economic financial situation is going to change radically. So I'm going to do my best to explain what I've been seeing and to help set sort of a clear view of what's been going on. I can pretty much sum it up like this. We've been dealing with the rise of the banksters. Banksters sounds like gangsters, except for it's financial gangsters. Not the old school gangsters that dealt with Tommy guns, but these use a different type of weapon. They use debt. They use money as a weapon, debt as a weapon. And whatever the banksters cannot control, they destroy. There's a few things to keep in mind. Everything when it comes to the state is illegal unless you have permission by the state to do it, whether that be to engage in commerce or to leave the island. You need permission by the state to do anything. All right? If you don't have the state's blessing, it's illegal. If there's any doubt as to what's legal, what's not legal, anything where you do not have the blessing of the state is illegal. All right? Which moves us to a very important juncture. And that is what's been happening with the cryptocurrency space. What we have seen is nothing short of miraculous. We have a situation where we have cryptocurrencies entering into the marketplace, and it's driving the central banks crazy. Why is it driving the powers that be crazy? It's because it's something that people are being drawn to, gravitating to, and they don't have control over it. Which leads us to the first point. Who are the banksters? As you can see here, hello, my name is Jacob Rothschild. My family is worth $500 trillion. We own nearly every central bank in the world. We finance both sides of every war since Napoleon. We own your news, the media, your oil, and your government. And you've probably never heard of me. Fact. This is fact. You can do your own research and you will still come to the same conclusions that this family equals this. Once again, this family equals this. Moving right along. This family created this. What is this? This is your World Bank. What is the purpose of the World Bank? Granting reconstruction loans to war-devastated countries that we caused. We being the United States of America, which is the military arm or strength of the central bank. Providing loans to governments for agriculture, irrigation, power, transport, water supply, education, healthcare, etc. Promoting foreign investment by guaranteeing loans provided by other organizations that we, the central bank, controls. Encouraging industrial development of underdeveloped countries by promoting economic reforms. Providing technical, economic, and monetary advice to member countries for specific projects. All right, that's what that is. We'll get more into that in a moment. Here's a very important quote by none other than who we just finished talking about, the aforementioned Napoleon Bonaparte, Emperor of France, 1815. And quote, when a government is dependent upon bankers or banksters for money, they and not the leaders of the government control the situation, since the hand that gives is above the hand that takes. Money has no motherland. Financiers are without patriotism and without decency. Their sole object is gain. Their sole object is gain. Gain. Let that marinate for a moment. Let's look at another one. Whatever issue you may be most concerned about, climate change, widening inequality, declining real median wages, rising poverty among the young, the soaring cost of healthcare, bailouts for Wall Street, the sprawling military-industrial congressional complex, the morality brigade that wants to dictate who can marry and whether a woman has control over her body, a government captured by corporations and the wealthy. Nothing can be done until we get big money out of politics and reclaim our democracy. It is the first step to all reform. It's difficult. It's frustrating. It's not sexy, but it is necessary. Robert Reich, or Reich, however you want to pronounce it. So far, I think you're getting the picture that the government is in the way. The Federal Reserve cartel, the 8 families. Get to know your government, because it's not a government. They control this, the physical aspects of this. They hold many nations' wealth. These are gold bullion bars, rows and rows and rows of them. This is what the real stuff looks like. This, of course, has been replaced with tungsten and been removed out of Fort Knox a long time ago. Bear with me because I'm getting to a very big point, which you will see momentarily. Just laying some foundation for you here. In the year 2000, there were 8 countries without a Rothschild-owned central bank. They were Afghanistan, Iraq, Sudan, and Libya, and Cuba, and North Korea, and Syria, and Iran. Since then, there are only 4 left. Do you see a pattern here? Is it strange that we now have opened the doors to commerce with Cuba, where it used to be banned? You couldn't do anything in Cuba? Remember, unless you have their blessing, it's illegal. Once you pay them, then it is legal. You can scratch Cuba off the list because Cuba now is come under control. And they sent Ambassador Jay-Z and Beyonce a few years ago to make that possible. So this one is checkmate. The next one is North Korea, Syria, who is in the news a lot, and Iran. North Korea, too, has been in the news. They're talking about the next step now is to take out the leadership there, something that our CIA knows a lot about because they have a habit of doing that. That would leave only Iran. It should be noted that Iran is one of the only, if not the only, nation or country on the face of the earth that has never been successfully taken over, period. Never invaded successfully, period. Never defeated in war, period. Last man standing. The reason for this, to get a little, how can I say, esoteric with you, is because of the mighty Prince of Demons called, does anyone know? Come on, anybody? You don't know? The Prince of Persia. All right, that is the answer, the Prince of Persia. Moving on. Next. Since that last one, you see this again, Cuba, North Korea, and Iran are the last strongholds before 9/11. Moving right along. Syria, North Korea, and Iran. Only 3 holdouts left. Syria, North Korea, and Iran. Is that there's always war talk and all this other nonsense coming out of Syria, North Korea, and Iran. Another thing we want to draw attention to here is before the September 11th attacks, there were 7 central banks in the world not owned by the Rothschild family. 9/11 gave reason to invade the Middle East. By 2003, Iraq, Afghanistan had established Rothschild-owned central banks. By 2011, Sudan and Libya, i.e. Benghazi, does that ring a bell? Benghazi, were also marked off the banksters list. The 3 countries left are North Korea, Cuba, and Iran. We can take Cuba off the list. This is starting to make sense. All right? Are you guys catching the trend here? North Korea and Iran are left. North Korea and Iran. All right. So the next question is, how do these central banking systems take over the world? One of the ways they do it is with quantitative easing, helicopter money, and the solution to climate change. You've heard that term climate change before. Climate change. You'll hear that again later. Here's another famous quote for you that I'm sure everyone is familiar with. And this quote is from Nathan Rothschild himself. I care not what puppet is placed upon the throne of England to rule the empire on which the sun never sets. The man who controls Britain's money supply controls the British Empire, and I control the British money supply. So he was telling you, in fact, he controls the British Empire. These are what we call facts. This is how they work. And the end result is this. Game over. Now that you know that, it's time to let these things seep in. And we're going to look at how this ties in to the entire, how can I say this, cryptocurrency. So the question that you want to ask yourself is, okay, what is a cryptocurrency? For those of you who are not aware or you're new to all of this, this is not a primer on cryptocurrencies. All right, that's not what this video is about. This video is about showing you some different avenues, things that have been going on behind the scenes, and to give you a little bit of clarity to hear what you're not being told about what's going on. So that's what this is about, to help you understand a few things. So let's talk. The issue is not so much as what is a cryptocurrency. The issue is not about that at all. The issue is about the technology behind said cryptocurrency. So in order to understand this, what's been going on, is to understand there's a difference that is already taking place. There is a metamorphosis within the realm of cryptocurrency. Enter Bitcoin versus Ethereum. Bitcoin is the largest cryptocurrency in the world. All right, top flight security of the world, Craig. Okay, but other cryptocurrencies are catching up to it, including Ethereum. While Ethereum functions similarly to Bitcoin, its structure and design is very different. Bitcoin was the first blockchain-based currency and offers the users the ability to safely and anonymously transfer funds through a decentralized distributed ledger. Ethereum borrows the decentralized blockchain from Bitcoin, but expands the design to allow for almost limitless possibilities. Limitless possibilities. Limitless possibilities. Computer versus currency. Blockchain technology requires a large distributed network where the ledger of transactions is recorded on each point in the network and every node is independent. All right, unlike with cable theory, you have your network, you have your nodes, which are which feed and house certain sectors of each community. That's what the nodes do, and you can have several different taps coming in, feeding in through that node, and that's how that works. And your taps are the things that are on top of your telephone poles for those aerial locations, and for those that are underground, you have your taps in these. I know on the East Coast, these green cone-looking things, where they can be boxes. Some can be like plastic when you need a key to open it. Others are metallic in nature. But anyway, nodes feed through these different things. So think of it like that. This allows users to send and receive currency without a third party, such as a bank. All right, so you're cutting out the bank while remaining secure through decentralized confirmation. Both Ethereum and Bitcoin are based on blockchains, but Ethereum's blockchain expands the concept of a distributed ledger to allow for more advanced commands. Ethereum's defining factor is the addition of a Turing complete programming language to blockchain interactions. So now you're like, Turing complete, what is he talking about? What in the heck is that? All right, well, let's break that down. What is Turing completeness? All right, in computability theory, a system of data manipulation rules such as a computer's instruction set, a programming language, or a cellular automaton is said to be Turing complete or computationally universal if it can be used to simulate any single taped Turing machine. The concept is named after English mathematician and computer scientist Alan Turing. A classic example is lambda calculus. A closely related concept is that of Turing equivalence, where two computers P and Q are called equivalent if P can simulate Q and Q can simulate P. The Church-Turing thesis conjectures that any function whose values can be computed by an algorithm can be computed by a Turing machine, and therefore that if any real-world computer can simulate a Turing machine, it is Turing equivalent to a Turing machine. A universal Turing machine can be used to simulate any Turing machine and by extension the computational aspects of any possible real-world computer. To show that something is Turing complete, it is enough to show that it can be used to simulate some Turing complete system. For example, an imperative language is Turing complete if it has conditional branching, such as if and go-to statements, or a branch if zero instruction. All right, so this has the ability to change an arbitrary amount of memory or the ability to maintain an arbitrary number of variables. Since this is almost always the case, most if not all imperative languages are Turing complete if the limitations of finite memory are ignored. All right, that's all you need to know when we talk about Turing completeness. Okay, so this allows users to create smart contracts. Ethereum can be perceived as a virtual computer made out of blockchain nodes, with every command being confirmed by the entire machine and saved to its public ledger. All right. Now, unlike Bitcoin blocks, Ethereum data blocks can hold more than just transaction information and can function as autonomous contracts. In simple terms, instead of sending money to an account, a user can use Ether to create an open contract which automatically complete as soon as the requirements are met. The contract is then verified and added to the Ethereum blockchain, remaining inert until complete. All right, so that is the difference between the blockchain and the Ethereum, and why Ethereum has been gaining big time um, on the whole Bitcoin situation. All right. Now, decentralization and value. Both Bitcoin and Ethereum are decentralized, but Ethereum attempts to prevent collusion and 51% attacks by encouraging users to mine with graphics cards. Bitcoin's blockchain nodes are grouped into many pools, some of which control a large percentage of blocks mined on the blockchain. Due to this, there is increased potential for collusion on the Bitcoin blockchain. While the proof of work mining system was the initial solution to the security of the blockchain technology, Ethereum's developers have proposed a new method to further increase decentralization and lower computing power costs. The upcoming system is a simple proof of stake concept which replaces mining with staking currency on whether a block should be added to the blockchain. Bitcoin and Ethereum cryptocurrencies are the biggest cryptocurrencies by market share, and Bitcoin has been steadily losing its market share lead since March of this year, 2017. However, Bitcoin remains the most popular and high-value cryptocurrency on the market. Not to mention, too, you guys, Litecoin is a third runner-up right now. Now, you see, that is what is at stake. It's the technology, not rather, Bitcoin and Ethereum is a replacement to fiat or to the dollar. It's the technology. So let's compare now blockchain versus, let's say, comex and globex. All right. First, let me dispel a myth. There are a lot of people on YouTube and on the internet talking about comex and collapse this and collapse that and failure to meet contracts. Even though I've explained this ad nauseum, time and time again through video documentary and what have you, people still make outlandish claims about the comex, and they just hold to it, and every time they do it, it gets views and blah blah blah. And it's funny because they talk about the comex and they know nothing about the comex. They don't even know anything about futures trading or trading in general, period, and they don't even know anything about comex. So let me just give you just a little tidbit about this comex and about this globex and how this blockchain is a threat to the centralized system that is already in place. COMEX and or the CME group, which is the Chicago Mercantile Exchange in Chicago, is the world's leading and most diverse derivatives marketplace made up of 4 exchanges. It's not one exchange. It's made up of 4 exchanges. So don't say COMEX this and COMEX that. It's made up of 4 exchanges. Made up of 4 exchanges. The 4 exchanges are the CME, the cbot, nymex, and comex. CME stands for the Chicago Mercantile Exchange. The cbot is the Chicago Board of Trade. NYMEX is the New York Mercantile Exchange. And then comex. All right? So, here we go. Because of this, each exchange offers a wide range of global benchmarks across all major asset classes. All right. COMEX, a designated contract market offering products subject to COMEX rules and regulations, joined the Chicago Mercantile Exchange CME group with NYMEX back in 2008. The merger expanded the suite of metals projects to include several global benchmarks in precious, base, and ferrous metals. All right, most people do not know that. Enter Globex, which is an order matching system. All right, it's an electronic trading platform used for derivative futures and commodity contracts. Globex runs continuously, so it is not restricted by borders or time zones. All right. Because of that, there are rules and regulations pursuant to how one is able to operate in these electronic structures. These electronic structures are separate entities than dark pools, all right, which are totally different. You can't operate in these the way you do in those. All right. As an example, here is what happens and what people have been doing, and they've been getting slapped on the wrist, punished for it. All right. Peep this. Pursuant to an offer of settlement, El Dorado Trading Group, LLC, presented at a hearing on June the 14th, 2017, in which El Dorado neither admitted nor denied the rule violations upon which the penalty is based, a panel of the NYMEX Business Conduct Committee, BCC panel, found that on multiple occasions in December of 2016 and January 2017, despite market regulations instruction to immediately discontinue this practice, El Dorado's traders continue to submit trading at settlement TAS orders in various products with knowingly incomplete values in the sender location ID, all right, field of its order message to assist in gaining a Q advantage upon the opening of the TAS markets. Once attaining its position in the queue, El Dorado then modified its order messages to correct the knowingly incomplete data in the sender location ID field. El Dorado failed to supervise its traders to ensure that this practice was immediately corrected. Additionally, El Dorado failed to ensure that the Tag 50 registration for its traders assessing the Globex system was current, accurate, and unique to each individual using Globex, and that its traders entered these TAS orders using a Tag 50 ID registered to a different user. The panel found that as a result of the foregoing, El Dorado violated Rule 432.B.2, .432W and 576. The penalty is in accordance with the settlement offer and considering the summary access denial previously imposed against El Dorado, the BCC panel ordered El Dorado to pay a whopping $125,000 fine. Now, see, this is not a Goldman Sachs or JP Morgan type of an outfit. All right, this is a small brokerage, and so that fine is going to really hurt them. All right, see, what they would have been better off doing is just going ahead and just playing in the dark pools. That's perfectly legal. You can do whatever you want to do, but no. All right, they wanted to try to rig the system. All right, wanted to try to front run and spoof with your orders, you know, cheat. That's not trading, that's cheating, that's manipulation. All right, so you can see there are a zillion examples like that with the Fed's system of doing things, with the central bank's methodologies of doing things that the cryptocurrency space is threatening. So now we have ourselves a debate, people. The great cryptocurrency debate. Enter the Fed versus Bitcoin. All right, the Fed is now going to attack Bitcoin, and they're going to enter their opening arguments against this dreadful, dreaded Bitcoin. All right, I'm speaking now as the Fed. All right, here's the accuser of the brethren, the Fed, the central banks. This is their beef with Bitcoin. And I'll change my voice so that you'll know that this is the Fed speaking and not me and my thoughts. Are you ready? Here we go. What Bitcoin really needs is a central bank to stabilize its value. When the demand for Bitcoin goes up, they need to print more to keep it from skyrocketing. That is, they need to decide whether they want Bitcoin to be a Ponzi scheme for techno-libertarians or an actual medium of exchange. See, the technology of Bitcoin really is revolutionary, we'll give you that. But the currency of Bitcoin is holding it back. All right? In other words, Bitcoin really could use, it'd be useful as a payment system if it had a stable value, but it doesn't. So it's just a .com stock, and one that could be co-opted by banks to take its technology to use with dollars instead. Notice how they slipped that little part in there at the end. Did y'all catch that? To be co-opted by banks that take its technology and use it with dollars instead. Did you catch that? All right, let's see what else Mr. Fed has to say. When they start pricing dollars in Bitcoin as opposed to pricing Bitcoin in USD, then it will be a valuable currency. See, did y'all catch that? In other words, if the Fed can take this technology and create their new one world currency, all right, whatever they want to call it, the Amero, whatever they want to call it, all right, as long as they control it and they can name it, then it's okay. But since they're not involved, it's not okay. You see, the USD is backed by the full faith and credit of the U.S. government, and that means the U.S. government's ability and willingness to extract a percentage of the productivity of every citizen and non-citizen which is subject to its rules. Bitcoin is backed by nothing. except someone's thinking there is a greater fool out there who will give them more USD in the future for their little piece of internet vapor that they paid for. But prices aren't set in terms of Bitcoin. They're set in terms of dollars. Dollars. So it doesn't hurt the real economy when the price of Bitcoin goes up. People just go on living their lives, mostly unaware of the virtual currency. But it does hurt the Bitcoin economy, such as is when the price of Bitcoin goes up. Why would anyone use their Bitcoins to buy things when those Bitcoins might double in value in a day or an hour or two? They wouldn't. A currency designed to create these kind of economic calamities, a currency designed for deflation, that is Bitcoin. There's a predetermined number of Bitcoins that will only grow at a low rate until 2040 and then stop. This artificial scarcity means that the dollar value of a Bitcoin should go up considerably, and it has. When prices fall, people put off buying things, and when people put off buying things, companies put off investing, and then the economy slumps and keeps slumping. Even worse, people are stuck trying to pay back debts that don't fall with wages that do. So bankruptcies pile up, and so do bank losses. That makes people too scared to borrow and banks too scared to lend, which only makes prices fall even more. Another basic feature of a currency beyond being a stable store of value, like the US dollar is, thank you very much, is to facilitate transactions. Barter's big drawback is that it's inconvenient. It's hard to make change, and you must find two people who want to exchange goods. 3- or 4-way trades get complicated. Currency solves those problems, meaning I can buy groceries without having to sell economic services to the supermarket. This convenience is why we move from barter to currencies, and then from metal to paper, from paper to plastic, and from plastic to electronic bits. The actions of speculators help to add market liquidity and to determine the market value of assets. The unbanked, they want to remain anonymous. The primary problem in serving the unbanked is that they live in a cash economy. They want to remain anonymous for various reasons, be they immigration status, fear or distrust of banks. They have low education. I mean, come on. The only way to solve this is to rewrite the onerous rules associated with networks like Western Union to allow unbanked to use completely transparent networks. Regulations are scaring off money spending projects because they were written for a more barbaric age. This can only change, but will take effort by the industry to move the perception that anonymous money sending is the tool of terrorists and drug dealers. By allowing $100 in cash to move anonymously, you are helping a poor worker and not a gangster. The gangsters have their own ways to move money, and $100 is pittance. Now, are you guys ready for the flip side of this? We've heard from the bankster, but there's yet more that the bankster has to say about this. This is the rub. Are you ready for this, folks? What the bankster is not saying is, what if we remove the need to convert to US dollars or any other fiat currency for that matter? What if merchants can take in Bitcoin and then use the same Bitcoin to pay for their expenses? This would be better, wouldn't it? Don't you think so? In this ideal state, assuming that there are enough companies willing to price goods and services in Bitcoin, there's no conversion needed to any fiat currency. But you know what the banker is going to say? Yeah, but see, if you do that, then you're going to run into trouble as constraints on the number of Bitcoins will limit the amount of commerce that goes on. So the value of each Bitcoin goes up, which seems great, right? Oh, yeah, right. However, as the value of each Bitcoin goes up, the very limit on the amount of Bitcoins acts as a constraint, and thus companies price services in smaller fractions of Bitcoins, as you are not going to pay 1 Bitcoin for a car that you paid for in, say, 2020 and 2025 with that same 1 Bitcoin is more valuable. So maybe what, 3/4 of a Bitcoin is suitable for a price of a car now? Give me a break. So if you keep dividing Bitcoins into smaller amounts, but this is essentially printing new Bitcoins. So you're running into the same problem that we have. Money printing. Bitcoin has the same problem as gold. The constraints on the amount of currency acts as a brake on the amount of commerce, hence the birth of fiat currencies. We all got wealthy by holding more US dollars. Yeah, but the value of that dollar has declined significantly, dude. With Bitcoin, we all end up holding more value in an individual coin, but just need less of them. Yeah, but Bitcoin is by design deflationary, young man. Once the maximum number of Bitcoins are created, they can only be subdivided. So each Bitcoin will become worth more. One could create a new family of Bitcoin with a greater key length. But there would be no easy way to translate from one variant to the other, so the same problem would just reoccur. With an increasingly unstable currency value the result. The technology behind Bitcoin may eventually make for better and more secure transaction records, but it will never succeed as a currency, young man. Yeah, but Ethereum is a variation on the same blockchain technology used by Bitcoin. It has numerous advantages over Bitcoin. Yeah, but it's likely going to still suffer from the same shortcomings as any other currency. Yeah, but Bitcoin is essentially just one function of blockchain. Ethereum provides a platform in which you can build essentially any application on top of the blockchain technology using Ether. So a comparison with used in modern day terms or blockchain is to Bitcoin as the internet is to email, which in turn drives more value for the currency due to growing demand to invest in companies requiring the use of Ether denominated coins/tokens. Yeah, but Bitcoin transactions can take up to 3 hours to complete at present. The value of the Bitcoin can change drastically before the transaction completes. The Bitcoin supply is limited by design. It can be subdivided, but lost coins are never replaced. So it is fundamentally deflationary. All right, so you guys have heard now the argument that the Fed has against Bitcoin. He is a raving lunatic. And even by that, you have heard the evidence and the proof that the Fed does not understand Bitcoin and really doesn't know what Bitcoin is. It's just terrified of the ramifications of said Bitcoin. So let's pause for a second, take a step back, and let's examine what is the definition of money. What is money? What is it? Well, the definition of money stands on 3 pillars. The first is it has to be a store of value. It has to be limited supply and scarcity. Well, let's look at store of value. So we're saying that fiat currencies that are printed with impunity by scams like the Federal Reserve are not a store of value. Let's get that on the table. Just look at the US dollar over the past 2 decades and tell me how good a store of value it has been. All right? The US dollar is worth like 10 cents on the dollar, if that. All right? The next pillar we're looking at is really a two-sided pillar. It's limited supply and scarcity. Well, to be honest and to be blunt, all fiat currencies fill that definition very poorly. Fiat currencies are not stores of value. But we all have to pay our taxes in dollars or be arrested by the largest security apparatus on the planet. That is what makes the US dollar valuable, not that it has any intrinsic value of its own. Which brings us now to the real fight. It's not really the Fed versus the Bitcoin. The fact is the blockchain versus global fiat. Check this out. See, Bitcoin's blockchain technology has been co-opted by banks, i.e. the central bank, i.e. the Fed, All right. They want to take its technology and use it with dollars. And by the way, Russia is switching their currency to Ethereum. That's right. Russia is switching their currency to Ethereum. Bitcoin is a debit credit confirmation triple entry bookkeeping system, and they hate it. The Fed can't even balance its books. That's one of the reasons why it hates it. Most currencies are inflated by their issuer. However, Bitcoin does the exact opposite, in that finding the next coin on the bit face becomes progressively harder. The point remains, as more people adopt Bitcoin and they become harder to mine, new coins will see a correlation in the price per coin rising. Sure, volatility exists, but will level off as adoption increases and the price per coin thusly rises. Any currency's value is based on the network effect. The only reason you are happy to be paid in US dollars is because many other people and businesses are in the network and they accept it. Bitcoin currently has the biggest, best network, and if it gets big enough, will become the de facto crypto standard. All right? So a stronger Bitcoin is just another way of saying that things cost less in terms of Bitcoin. In other words, there's Bitcoin deflation. There's no denying the volatility, but at the end of the day, I'll take a volatile currency that has increased in value 4 times over the past year and 400 times over the past 5 years versus a stable currency that loses value every year. It loses value every year and has lost over 90% of its purchasing power since the Fed took control. I'll take a currency with a strictly limited supply versus one where central banks can increase the supply to infinity and beyond, like Buzz Lightyear, at a whim to suit their needs. I'll take a currency that has been adopted voluntarily by people over one that has been forced upon people by the Federal Reserve and central banks and their government lackeys. Sure, there is a speculative frenzy to some extent, but merchants worried about volatility can immediately exchange their Bitcoin for fiat if they wish. There are services that do this for merchants, plus the fees are much lower than Visa, MasterCard. On the other hand, businesses that kept excess funds in Bitcoin instead of switching them over to dollars over just about any time period are in a significantly better financial position today than their counterparts. All right. Now, it is true there's been a lot of Bitcoins that have been taken out of clients' wallets and Bitcoins being untraceable. There's no way to go after the people that took your coins. If your wallet website goes down, you can't do any transactions until restored. So you should have your own wallet, not let some unregulated website hold something so valuable without any insurance or implied liabilities. Blockchain is the technology, and Bitcoin is the product built with the blockchain technology, as are the other e-currencies that are out there. The value of a crypto is its blockchain. The bigger, faster, more prolific a chain is, the valuable it is. The reason there is so much volatility has only to do with the new technology that is upon us. It's a better mousetrap, and many different constituencies see it. All right? Stocks have gone through periods of extreme volatility on the way to establishing their value also. Okay? It should also be noted that in the early stages of Globex's implementation back in the 90s, they experienced the same thing. There were times when the Globex would lock up and prices would jump and skip all over the place. And I can't tell you how many times they had to bust trades in the past. Even dealing with stocks, on the other hand, we've had flash crashes, have we not? Okay, and the problem is that we have a central exchange per se when it comes to stocks, okay? We have exchanges, we have brokers, but still they were able to bring it down on a whim. So you can't say, you can't make the argument that just because there's been volatility in the crypto space, that that is the problem, all right? That's not the problem, okay? I repeat, that is not the problem. The problem is it's a new technology and it has to be, you know, it has to go through its growing stages, its growing pains, if you will. All right, so Bitcoin and Ether, maybe even Litecoin and Ripple, are creating value for wide swaths of the world's markets. All right, so the best thing for you to do is keep your coins in a hard drive wallet and just enjoy the ride. Now, on the flip side, the Swiss franc dropped almost 30% intraday a few years ago. 30% intraday. Like Bitcoin, gold has no dividends or cash flows either, nor do currencies, the fiat ones for that matter. Fiat money is the ultimate house of cards, and it is used still worldwide. The US dollar being controlled by a private corporation called the Federal Reserve, who only appoints friends to manage trillions in assets. First of all, this is done unconstitutionally, as only the Congress has the ability to coin and regulate our money supply. But hey, it's still being done, and there's nothing you can do about it. All right, at the end of the day, the government is good, free market bad. All right, they want to control everything. And this we conclude with, unfortunately, a new bill was introduced on the floor of the U.S. Senate entitled Combating Money Laundering, Terrorist Financing and Counterfeit Act of 2017. It's saying cash is evil, Bitcoin is evil. They even go as far as to include prepaid mobile phones, retail gift vouchers, or even electronic coupons. Among the bill's sweeping provisions, the government aims to greatly extend its authority to seize your assets through civil asset forfeiture. Civil asset forfeiture rules allow the government to take whatever they want from you without a trial or even due process. This new bill adds a laundry list of offenses for which they can legally seize your assets, all of which pertain to money laundering and other financial crimes. They've also vastly expanded the definition of such financial crimes, including failure to fill out a form if you happen to be transporting more than $10,000 worth of monetary instruments. They're authorizing themselves in this bill to seize not just the money you didn't report, but all of your assets and bank accounts. They even go so far as to specifically name safety deposit boxes among the various assets that they can seize if you don't fill out the form. They're threatening to take everything that you own merely for not filling out a piece of paper without any due process whatsoever. On top of civil asset forfeiture penalties, there are also criminal penalties. Right now, according to current law, they can imprison you for up to 5 years for not filling out the form. So this bill aims to double the criminal penalty to 10 years in prison. And if that weren't enough, this bill also gives them the new authority to engage in surveillance and wiretapping, including phone and email, if they have even a hint of suspicion that you might be transporting excess monetary instruments. Banks in the U.S. are already unpaid government spies, required by law to fill out suspicious activity reports on their customers. Now Congress is starting to expand these requirements to include other businesses and industries that might come into contact with cash. And that includes stockbrokers, casinos, currency exchanges, precious metal dealers, pawnbrokers, the post office. According to the law, Section 5312 of the U.S. Code Title 31, those industries are also required to spy on their customers for the government. But under the new bill, They want to forcibly recruit even more unpaid spies, including any business which issues or redeems anything that's prepaid. Prepaid cards, prepaid phones, prepaid retail gift cards, prepaid coupons. As you can see, this bill criminalizes or delegitimizes the most mundane and harmless financial activities, all under the guise of keeping us safe. Of course, nothing in this bill is about keeping people safe. ISIS couldn't care less about forms and penalties. This bill is nothing more than another weapon in their ongoing war on cash and now cryptocurrency too. And at the end of the day, it's a war on you. All right? They're seizing control of everything. Everything. They have seized control of the air. They've seized control of the water. For those of you that are not in the know, for those of you who are younger viewers and listeners, you probably are unaware, but I'll just tell you anyway. Those individuals who are 40 years of age and over can remember growing up drinking tap water and having no problems therein. Now you can no longer drink tap water because it will kill you. Just look at what's happening with Flint, Michigan. Flint, Michigan is the tip of the iceberg and is also the canary in the coal mine to let you know that they've been poisoning the water now for decades. All right? They've been poisoning the water. So is it far-fetched to believe that chemtrails are real and they're poisoning the air as well and allowing harmful, poisonous ingredients in the food that you eat? All right, everything that the government or the dark state, all right, the shadow government, everything that they touch, they destroy. And we say they, we mean non-elected people that govern everything. The merger of corporations and government, the fascist state we found ourselves in. And I warned you and I told you that they were coming for the blockchain. The government wants to outlaw cryptocurrencies altogether because it wants to create its own. It wants to create the one world currency because that blockchain technology, especially the way that the Ethereum is using it, has limitless possibilities and capabilities that they can build into it to control and monitor everything. And basically what it's going to end up boiling down to is if they don't like you or they have a problem with you, they just turn you off. They push a button and they don't have to worry about asset forfeiture. That's just the law, the legalese that they're writing, giving themselves permission to dish you. Basically what it means is they will prevent you from being able to operate in society. Because that's what it means. Talking about they want to imprison you for 10 years. That's making you a slave of the system. Then you can't leave the country. You can't vote. You can't do nothing. They own you, and then they get to get 10 years of free labor off of you through the prison industrial complex. You see what I'm saying? So the state not only takes and seizes everything that you own and worked hard for, but then they get to force you into forced labor, slave labor, where you work for free, all right? And they get to benefit off that labor for 10 years. And then after that, now you have a criminal record or a scarlet letter on your forehead that will keep you out of the workforce, all right? And essentially almost make it impossible for you to even engage in entrepreneurism. So they know that the recidivism rate will be high because then you have no choice. You got to eat, so then you go and you turn to illegal means, which brings you back into the prison industrial complex for more forced slave labor. Keep in mind that slavery in the U.S. was outlawed except for imprisonment, all right, except for felonies. All right, if you are imprisoned, you lose your constitutional rights, and then you become a slave, a ward of the state. All this is coming into fruition, coming into place, so don't think it's strange. You've been forewarned. All of this has been foretold to you. I've been telling you guys this for months and weeks. All right, for those of you who missed it, you want to go back and you want to listen to the video series I did called There Is No Collapse. These two go hand in hand. This is the part 2 to There Is No Collapse, except for the one that they're manufacturing. All right, so you need to understand what's coming before you. They're building this a lot faster than even I thought they would. All right, so with that said, I just wanted to give you guys the lowdown, what's been going on, and why everything, there's a lot of information out there and opposing views and foolishness, and I just wanted you to get the real, because guys, I keep it real with you, okay? So with that being said, come on over to pulsewavetrading.com and learn what the central banks don't want you to know about the markets and investing, all right? You want to do this while you still can, ladies and gentlemen, because one day you won't be able to. You won't be able to engage in these markets the way you can now. So do yourself a favor, provide that extra income stream for you and your family. And thanks for tuning in to another special edition of the VULCAN Report, the Fed versus the cryptos. Peace.